afternoon, good evening, good morning, and good night, wherever you are on the globe, and usually say happy today. Um, Welcome to the show, Proof of Work. I'm your host, Gerald Vada, aka Jerry V. It's my producer Nick. He is been co-hosting for the last couple shows while Maddie's been out due to his little accident. It wasn't a little accident; it was a pretty big accident. But he's doing better. We're trying to get him in today. I think he was having technical difficulties. He'll be jumping in a little later. But let's thank our sponsors at Quantum Expeditions. Obviously, if you don't know what these guys are all about, they are using methane flare to mine Bitcoin. This is the future, solution, another application for Bitcoin, right? Another energy application for Bitcoin. The crew at Shield Folio, let's thank them. Should be a QR code coming up in a second, but yeah, they help protect your seed phrase. Very important stuff. If you are in the space, there is the QR code for the discount. And let's also not forget to thank Bitcoin, everyone in the Bitcoin live team and Deorganized Media. I think I got them all. But yeah, today's show's topic is the 4-year cycle kaput. I've been saying for some time that I think this is the case, and obviously we're going to look at some of the evidence that I've come up with to prove this, the data like behind it. One of the first things I wanted to take a listen to, I'm just trying to I'm kind of distracted because my cat is again coming up here. Right? Yeah, they're sneaky. But yeah, I wanted to pull up a clip from earlier today from Mahdi Greenspan, because I said we were going to be talking about this on the show, and I'm sorry because my cat was distracting me, and now I got to get back to oh yeah, where is everything? Here we go. I think that is the one. Nope, that isn't the one. Sorry, give me another second.
Hey, he's got the scam. Hello there.
What?
Nice.
On?
It is.
There you go, bro.
Looking sharp.
I've got to rotate through laptops here, man. I don't know which one's working, which one's not.
How you feeling?
Well, getting better every day.
That's good, man. What doc says it's good, all good signs.
Making progress. Yeah, making some progress.
Awesome.
But yeah.
Well, good to have you back. But yeah, so we're just jumping into it. I'm pulling up a clip from what Mahdi said earlier today, and here is that. Right.
I'll give you my opinion as far as the 4-year cycle, and I've been saying this for a while, but the 4-year cycle is absolutely dead and buried a long time ago. And case in point, this past halving, I remember doing the math at the time, and the daily issuance of Bitcoin went from around $60 million worth a day to about $30 million worth a day. I think that was around Bitcoin. Bitcoin was probably around 40 or 50K at the last halving, if I remember correctly. So, okay, so let's say we went from $120,000 issuance a day to $60,000 issuance a day. the on-chain volumes alone can rack up to $10 billion sometimes. And that's not like to count the institutional ETF volumes and all of the exchange volumes, right? So altogether, I mean, we could be looking at, 30 to 50 or even $100 billion worth of volumes a day. Now, how much do you think, $50 million is going to affect, $30 billion worth of volumes? It just doesn't. It's kind of silly, and the amount that of Bitcoin issuance that was reduced in the halving is completely negligible in comparison to the daily volumes, and therefore that factor alone tells me that the 4-year cycle that surrounds the halving, or that the halving itself, shouldn't have any noticeable impact on the price just by order flow alone. If there is any sort of impact on the price, then it will most likely be psychological, because we have that day once every 4 years where we remember that Bitcoin is scarce and finite and eventually will run out. And why I think it's going to be completely toast this year, or this time around, is because of the Federal Reserve. And our research has shown in the past that the Federal Reserve, whether they're printing or not printing, has suspiciously lined up with Bitcoin's halving cycle. So we put it on a chart and we're like, okay, we don't really know if it's the halving cycle or the Fed who's really affecting things that much, because every time, the halving cycle was said to have had an effect and Bitcoin was going up, the Federal Reserve was also printing money like there was no tomorrow. And every time it was said that the halving cycle was making things go down, the Federal Reserve was also, constraining supply of money. And so my thought was always that it's the Fed, the ones who are controlling the dollars, the dollars that get, the newly minted dollars get printed, and they go, where are they going to find a home? More often in Bitcoin and other risk assets. So that was my thesis, is that the Fed was the one driving that. Now, here's the fun part, is that if we're going by the current 4-year cycle, then the Fed should have been printing over the last year and a half, which it hasn't been. And instead of that, we've seen Jerome Powell kind of continue with these austerity measures and tightening and constraining money supply, not lowering interest rates intentionally in order to try and beat the inflation monster that they themselves created, which, don't even get me started on that. I'm not ready for that tangent. But where I'm going with this is that Jerome Powell's out as of May of 2026. And Trump is trying to, create some sort of a interesting coup for him, which could have an effect on things. But if I see the way that things are going, May 2026 is Powell's expiration date. And at that point, Trump will absolutely install a Fed chairman who will lean on the money printer button like it has never been leaned on before.
Why don't we leave it at that? So we if we listened to what I said in there, I was had those kind of sentiments as well, where I felt Jerome Powell is going to cut rates. When is that going to happen? We think possibly the next meeting, which me and Nick were just talking about, which is in just 17. A few weeks.
Yeah.
Yeah. So some of the other signs that, Bitcoin is fine and the sky is not falling, and this is not like any other time. I just shared a new tab. We can take a look at the hash rate right now is 980 exahashes. So it's right around a zettahash.
Mhm.
And it did just hit 1.279 zettahashes on September 2nd, just the other day. So the network is strong. Again, all signs point to this is a different cycle. And even if we zoom out, right, if I go back to that and zoom out on that chart to even just a 3-year chart, just look at how much power it is like behind the network. It's just going to keep going up, and it's going up exponentially over the next like 5 to 10 years. This is just a fact. And again, I think I found this article. Yeah, here it is on Yahoo Finance. I think the title is the same thing as Bitcoin's 4-year cycle over, why BTC may finally break the trend. And then Eric Balkunis, I think that's how you say it, I'm not sure. This guy gets it. We've been saying the same thing since BlackRock filing. Bitcoin is up 250%. With much less volatility and no vomit-inducing drawdowns, this has helped it attract even bigger fish and gives it fighting chance to be adopted as a currency. Downside is probably no one will get this. But right below it, BTC USD looks like two entirely different assets before and after the ETF. The days of parabolic bull markets and devastating bear markets are over. BTC is going to 1 million over the next 10 years through consistent oscillation between pump and consolidate. Yeah, so that's the bad part is, could it take
The bad wait. The bad part
This
is what?
10
That it's going to
years.
take 10 years. Is that what you're saying? That's the bad part.
Yeah. It may take 10 years.
Ah.
But at the same time, like me and Nick were just discussing that, and I'll pull this up, and I should just pull it up right now. The outflows of Bitcoin from just this
Yeah, the
last
outflows.
month,
You can see,
right?
even look at the Ethereum outflows. I mean, we've seen some outflows here, right? But it's
Oh yeah, there's crazy
everywhere.
outflows in both. But the main thing is look at the green spikes, right? If you can see those, the green spikes in August were like massive, right? The green spikes, I'm sorry, in July were massive. In August, they were starting to get like smaller and smaller and smaller. The good thing is, it looks like these mega outflows that were happening in let's see, this big red one here was the beginning of August. This is August 1st, and the outflow of almost $1 billion, BTC. So I mean, worth of BTC. So this is obviously slowed down dramatically over the last even few weeks and days. But the good news is, if I scroll down here, look how big IBIT's getting. Holy moly, man. IBIT is literally turning into this behemoth of an ETF, which I think we did predict would be one of the big winners. But Fidelity's right there with, sorry, my dog is grumpy for some reason today. Buddy, quiet. I took him out on his walk today, so he's just being extra grumpy. But yeah, Fidelity's holding tough right there as well. And again, this is one of the reasons why this time it's different. Like those outflows up here are massive, And like I was saying earlier, there's like, I don't even know how many whales that just dumped massive positions, and Bitcoin's still at like close to $110,000. If that would have happened just a few years ago, oh, Bitcoin's going down 30-40%, no problem. So this is different, and we're starting to see like all these companies across the globe in different countries, from Norway to the Middle East to Japan, either buy Bitcoin directly, buy into the ETF, or buy MicroStrategy, or buy one of MicroStrategy's product, which I saw the tweet the other day. It's like, oh yeah, the dividend on that one's 10% now, and people were like, oh my gosh.
I think that was Strike, the product, correct? I believe it was Strike product.
Yes, thank you, sir.
You brought up an interesting point here about Sailor, and you in the charts here with the ETF, and I think really we're looking at a heavyweight battle between Larry Fink and Michael Saylor when it comes to the HODL stack of Bitcoin. I think if my math is correct, let's see. To carry the one, I bid about 750,000 Bitcoin, where I think Michael Saylor, 1, 2, 3, 6, carry mine, about 636,000. So I think I bid's out in front by about 130,000, rough numbers when it comes to Bitcoin. But we're looking at two behemoths here, really trying to acquire a whole lot of Bitcoin, whether it's through an ETF or it's through one company doing it. But the race is on, and we're seeing this is the hyper Bitcoinization that we've talked about. But I think because of the chop, the uncertainty, and all of this thing going on, people have become numb to it, right? They've become desensitized. There's still a lot of PTSD, I believe, in the market from 3 Arrows, Celsius, all that kind of stuff that's happened. So people, again, there's some caution, some trepidation in the market. But if you zoom out in the big picture and you know where the puck is going, and you see people already seeding the narrative of Bitcoin going to $1 million. At first, it was kind of, hopium or whatever, but now you're seeing smart people come out and really kind of seed this narrative. So I think that, we've been in this for a long time. Since 2017, I've been in this asset. And for a long time, a lot of us thought, okay, 20K, boy, it's going to be great when Bitcoin hits 20K. Oh, we did that. We got there. And then it was laser eyes, laser A's to 100K, right? And we're going to, oh my gosh, wait till 100K. And now we've seen that 100K has now become the new support, the new level, the bottom, right? So that quest to 1 million really is, in my estimation, I think it's going to be sooner than this 10-year window that you have mentioned. And I know that Fred Krueger has mentioned he thought maybe by 2030, 2035. But I think with the way things are going, and you look at the BRICS economy, we see the rush to gold. Look at how many central banks around the world right now are rushing to acquire gold. Actually, the Central Bank of Poland is leading the charge, acquiring more gold than anybody right now. So again, we're looking at this move into hard money. And as soon as gold, as gold goes, Bitcoin's going to go there. We've seen the new all-time high in gold. Jerry, to your point, we've already seen the all-time high on the hash rate. As this thing continues to go. So if you're not taking the opportunity to stack sats right now, well,
but I think also what you said and what Matty also said about the central bank, right? The Federal Reserve. What are they gonna, what will be the effect of when they drop rates? Because you actually also have a whole narrative going from the doomers who say, like, if they drop the rates, that's, when the economy tanks, right? So there's also a lot of uncertainty. Some people say, it will boom. I'm more inclined, in that camp. But there are actually a lot of people who say, that's sort of the moment that, that we have a nosedive because the Fed always, responds too late to market conditions. So I think after, the middle of September, we should have some more clarity which way the market is going, right?
Oh, I would agree. I think rate cuts are probably, this is a conversation we've had on a few other spaces. Is the market already pricing them in? And I think in some aspects, maybe it is. But I think the other aspect that that you got to factor in here, if you're talking the overall market, and I want to zoom out away from Bitcoin because Bitcoin is its own unique asset, and we put it in comparison with a lot of others here in the crypto world, and I would use crypto in quotes. But I think, you go back to Eric over there at Bloomberg, the guy's a savant, and we're talking about ETFs, and we're going to have a monsoon, I believe is how he put it, a monsoon of ETFs coming here in October, a lot surrounding Solana. So I think think again with interest rate cuts in September, it's risk on for a lot of these assets, and we're going to see September and October. Not financial advice.
I totally agree. And, I actually made a list of people who now believe in an extended bull run. Of course, Matty Greenspan is one of them. I didn't know that, but, I should have known. But Christopher Inc. is another one.
Great guy.
Alessio Rastani believes it. Charlie Burton believes it. Fibo Swanee believes it. Raoul Paul definitely believes it. Tech Dev believes it. So there's like a whole list of analysts who say it will be an extended bull run up. They set the high marks next year, actually.
Yeah.
Yeah. Again, so just a perfect segue into what I wanted to talk about a little bit next is I went to CoinGlass and I tried to ask ChatGPT, hey, can you take all this data and compile it and just do just a little bit of basic math for me? I was like, no. So here's what ChatGPT said. Go hook up the CoinGlass API, blah, 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 blah. So I pulled up Julius AI and literally I cut and paste like right from CoinGlass, this huge, just like right off the page, and put it into there and asked it, hey, I'm trying to add up some information on here. And of course it's like, no problem. And watch it, like here does it start to code and it kicks out the information right. Let's see. After this, because then I was like, wait, you missed some. And then it was like, oh, wait, you were right. Here's the next one. Oh, yeah, here it is. So here was the first answers. Then I was like, it appears there are 19. And it's like, you're right. And then it crunched him again. And it just like kicks out the code instantly. Like, this is some tight stuff. But look at this. Here's the answer. Right here. So from the content, I can see it appears the Bitcoin ETF holdings data found several key information. Data shows a total approximately 1.32 million BTC across all ETFs in your data set. Obviously, we saw that IBIT is the biggest, but it looks like, a Fidelity and Grayscale were close second and third, which you could have seen from just the little heat map we looked at. But I wanted that total, and it's 1.321513 Bitcoin. And again, I think this is important because as the ETF and MicroStrategy's positions grow, that position that is liquid on exchanges is going to get smaller and smaller. And it's only a matter of time before that it's like a ticking time bomb. And that's why I think once that event starts to like fulminate, oh my gosh, that's when Bitcoin has done 10Xs, no problem. It's done 100Xs. It's done 1,000Xs, right? We all know this. So for it to go from 110K to like 1.1 million or 1.2 million, because all this pressure is building up around it. We
Gerald,
can see it.
Don't you also think sort of like around this 100 mark, you see these gigantic whales, these OGs who've been, in the space for a very long time, who probably amassed like gigantic amounts of Bitcoin, like probably in the millions. They can sort of feed this market, right? There's sort of this rollover from OG whales to feed the ETFs or something. Probably they're getting a premium or death threats.
Yeah. Especially when you're seeing Bitcoin still achieve these new all-time highs. And, if you've been in that space since like 2011, you're like, oh my gosh, if it's back up, like, and I wanted to sell at those levels, and you have a couple like extra thousand, which would be amazing, right? it's an open market. That's one of the things I always tell people when they say, oh my gosh, why is it going down again? It's like, it's an open market. And that's the most important thing that people have to understand. It. People are always going to buy and sell their Bitcoin. People are always going to be spending their Bitcoin. And that's one of the main reasons I was trying to convey in this space when these, all the gamblers, right, on Deribit and Binance and all these other exchanges are 150x in their leverage for their 500, 1,000, 10K position to try and earn Bitcoin. They're just putting that Bitcoin right back into the market. So it's always going to be this fluid market. It's a matter of time where those gamblers realize it's just better to just take those Satoshis that you converted into Tether, and we're hoping to get back Bitcoin, and it's poof, it's gone, because it's billions and billions and billions of dollars since the halving that's been liquidated on the longs and the shorts, which I always tell people, like, Bitcoin is ruthless that way. It doesn't care. It does whack the longs, whack the shorts. Ha ha ha, like F you. And that's the dragon of Bitcoin. It will take you out. And who are you making rich? You're making CZ more money, right? And all these guys that own these exchanges, tons of money. That's all you're doing, when you could just sit on those Satoshis or put them into a Lightning wallet. And when Bitcoin, like I was saying in space, is 125K, yeah, go buy lunch with your Lightning wallet. If you can do that. You should be able to do that in America in the next 12 months because of Mr. Dorsey, right? So
I think
that's another thing that's coming as well.
Though, Gerald, I think you're going to see Bitcoin probably not used as much for payments. I mean, we're seeing just so much, everybody and their mom launching a stablecoin network. I mean, just today, more news breaking between Stripe and Arch, and they're creating a Tempo. I remember there's Tempo and there's Arch, and it was Stripe and Paradigm. I'm sorry, those were complete. I got to look at my notes here, but everybody and their mom is coming out with a stablecoin network. We're going to see stablecoins adopted. Every bank is coming in. It seems to me that the financial service industry is skating more towards Bitcoin DeFi lending against it, and then the stable coins will be the rate of commerce and the way that everybody does their transactions. Is the way that I see it, just kind of playing out from this perspective. Because at that point, again, why sell your Bitcoin when you can leverage against it? I mean, for example, Grant Cardone selling his home for 400 Bitcoin. Well, guess what? Now he's got 400 Bitcoin. He can go out and get a loan against that 400 Bitcoin, right? Which is going to be a shit ton of money. And then guess what? He can go out and take that loan and that he just got now and go buy a new house. And now that loan. Yeah,
and also, I think, from the perspective of the governments, that is what they want, right? They don't want us to spend our Bitcoin, right? So they will do everything in order to incentivize us not to do that.
But the real alpha there is when you take out that loan against your Bitcoin, and now you've got fiat or a stable or whatever form that you're getting that in, right? So let's say I sold my house for 400 Bitcoin. I don't even know what that number of dollars in dirty fiat would translate to off the top of my head, but 400 Bitcoin would be a lot of money in dollars, right? Then I take that and then I go and buy the house with that loan, right? Against the Bitcoin. But as Bitcoin continues to appreciate, the CAGR on that, I can refinance that loan, and then my house is already secure and the Bitcoin's already secure. So now I'm living in the house. Like, that's the baller freaking move, man.
Yeah, it's like what the boomers did.
Yeah.
Yeah.
Oh yeah, and I heard Cardone. Did you bring him up? I'm sorry, I was trying to find this Samson Mao clip. I couldn't find it. But yeah, one of the Cardones is selling their property, and we were just talking about this on I think it was like 2 episodes ago. I was like, I paused and like made like a PSA. It's like, if you're a boomer, like, don't take your house off the market, put it up for, if your house is 500K, 5 Bitcoin, and get that Bitcoin, because it's going to go to $1 million, and then you're going to have $5 million, and your house is never going to go to 5 million in like 5 or 10 years, right? Let's just be clear. Like, if you have a 500K house, it's not going to be $5 million in 2035. right? It's not. It's just not. If you look at charts, and we did last show, I think we looked at charts showing this, right? Showing that literally property values against Bitcoin and almost everything else except for other commodities have been doing horribly against Bitcoin. And the only commodity that didn't do good against the price of Bitcoin is real estate. It's doing horrible. And that's what people have to learn. And again, sitting on those properties and then taking them off the market is not the smart move, because again, you have $1 million home, put it up for 10 Bitcoin, and at some point Bitcoin gets close to 10 to 100 to maybe even $1 billion, right? And I was the first person to ever say that way before Fidelity said it, right? And people looked at me like I was crazy as ish, right? Like, but I have the receipts to back it up. It is on Twitter, or X.
This one, I pulled this one up for you.
I think it will hit $1 billion because there's just too much money that is coming this way. All the smart money's figuring out. And when the smart money has more of their positions built up, they're going to, tell other people. And I just tell people to just get original exposure. Like I was talking to these people at work, like maybe 2 weeks ago, and they knew about crypto. They were older. They were like close to 70. And I was telling them, people want to get that ETF, but no, buy Bitcoin. Just go to Cash App, right? Buy your own sats, get your own sats and own your own sats. Because even though it's a spot Bitcoin ETF, remember,
they don't have in-kind. They don't do in-kind redemptions yet, I believe.
Yeah. Again, that's and the way Coinbase does it is they sit on cash, and as the inflows come in, which you saw they were a little low the last couple weeks, they sit on it. But once it the beginning of the month, and it was probably after the Labor Day holiday, they take that money and then buy spot Bitcoin and then put it into the ETFs for the customer. But yeah, if the customer liquidates their ETF position, whether it's like Robinhood or whatever, they're getting dollars back, right? Let's be very clear. That's another part of the equation that slows this down. If those customers were getting back Bitcoin and understood that they should be taking actual possession of their Bitcoin and not being taking crappy fiat dollars, is
I want paper Bitcoin because I don't know how to self-custody.
Yeah, exactly. I don't. Again, when people say it's difficult,
pretty easy. Look, this is
difficult.
A Bitcoin wallet right here. You see this? It's a Bitcoin wallet. There you go. Look at that. That's a wallet, and you can plug it in. Boom, and there you go. A Bitcoin wallet right there. Simple and easy.
Yeah.
I shared this one for you, Gerald. It's the United Arab Emirates and their Bitcoin holdings, their ETFs.
Oh yeah, there you go. They just bought $500 million into the ETF.
Actually a whole billion, because that's two different wealth funds. You got Abu Dhabi sovereign wealth funds.
Oh wow! Again,
yeah.
So this is
a fad. It's going to zero.
Where, yeah, this is the point where we're all talking about. Everyone's figuring it out, right? And now it's becoming like, oh my gosh, if I have extra money, the only thing really to be putting it into is the only thing that seems to be growing by leaps and bounds, and that's Bitcoin at the moment. And I think other people are starting to realize that any of these other crypto assets, unless they are truly limited reserve, then it's all bets are off, right? Like that's one of the main problems with Ethereum is the supply was supposed to be shrinking because proof of stake, and it's going up. Like, whoa, what? Hello, can anyone answer that one for me? And again, it is what it is. But Bitcoin, it's the phenomenon keeps growing, right? And the virus keeps spreading, and the 1%ers of the world are buying up more. We just saw the tweet that Nick shared, right? They're buying up more and more of the
but
ETF.
you know what you are seeing though, Gerald,
they're-
you're seeing a lot more though of the institutional folks pile into the Ethereum ETF. I mean, we're seeing some, even though we have seen over the past month, the outflows on both of them though, but we are seeing a massive movement and a massive shift in finance towards Ethereum, towards the ETFs, especially again in light of the Genius Act, of stable coins, all these kinds of things. And I really think that as we move through the days, weeks, and months to come, through Q3 and Q4 and into 2026, I'm of the mindset that we might even see Solana really come up and take some market share away from Ethereum when it comes to stable coins. They've got the new update. I believe it's a node update that Solana is launching. Again, check me on that. Again, I'm just riffing here, cooking as we're live from, what is it? Bottom of the hour here, but I know that we got a lot more Solana ETFs on the way, and we've seen a lot more Solana treasury companies as well. So if they can make that upgrade where they can, increase their uptime, I think that's going to be a big thing for Solana moving forward. And you don't have the gas fees, because as Ethereum goes up in price, great. Well, then so do those gas fees. And so I don't know if I really want to be conducting business and cross-border payments on Ethereum with gas fees and layer twos and all this kind of, I don't know, man.
I got a theory on Ethereum, right? I think there's some big backers, backing Ethereum, right? You got the Ethereum Enterprise Alliance with some really big names in there. I think, they're jumping ship, so they want to give Ethereum one last gigantic pump, drop their bags, and then jump ship into, Solana or whatever. So I think that's, it's the last time that Ethereum will be number 2 after this run. I think it will shift. And by the way, Solana is rebranding also, right? They're focusing more on decentralized science, DeSci. So they're trying to get away from the meme coin thing.
Which I think is good. I think that they need to. I think that's smart. So yeah, the DeSci and DeScience, we were having a conversation about this the other day, which is just like mind-blowing and melts my mind.
They got 2 shows coming up on DeSci, yeah. One on Sunday and one on next Saturday. The Saturday after that. Yeah,
fascinating.
But yeah, I think you're both right about Solana. If you didn't hear the story, I think the big story of the week was that Galaxy Digital is going to be doing their own tokenized shares just on Solana. I don't through traditional networks. They're just going to be offering it through Solana. So you will have to be like a crypto nut to just get their stock, right? So that's pretty cool. And what's funny is I just read that article and I was going through X and somebody had that their hat. I think it's GLXY. Not financial advice. I don't hold any. I don't even think it's offered. Also, big story of the week, and why I think my new theory is it's a good one. Is why we're going to continue this bull market throughout. I think it'll even carry some of the equities market, as I think that as we blossom into this amazing, cryptoverse that we've all been either a passenger, builder, experimenter, etc. on, we're all being moved into traditional finance. And I think the next move is we see all these IPOs with a rate cut. We're going to see all these IPOs launch of crypto companies, and already, obviously seen Circle and a few other companies do this, and they have already been going woo. And obviously some of the crypto mining companies. But the latest is Gemini, right? Gemini is going to be, I just saw it on Robinhood. I was like, what? They're like, oh, would you like to be on the IPO? I was like, yes. But Gemini is going to be going IPO through Robinhood, and almost every company that has launched through Robinhood, except for like 1 or 2, is up hundreds and hundreds and hundreds of % since then. So I think we're going to see more and more crypto companies get transitioned into the NASDAQ, into the S&P 500. And as this happens, we're going to see, like Coinbase, we're going to see the equities market take advantage of this almost, the coattails of Bitcoin and the cryptoverse. And that's going to lead to this like golden age that, Trump is kind of hinting at, which he sees this vision, which he's, this is the smart side of Trump. Like, I tell anyone, like, look, I'm not the biggest Trump lover ever, but if you can change your mind and understand why Bitcoin is important, then I respect you, because you went from going, oh, this is garbage, to going, no, this is important stuff. Then you're a smart person, because intelligent people can change when the information changes. And he eventually talked to smart people, and they were like, no, this is like the steam locomotive, and we're, the TransUnion Pacific here. And he gets that, right? And that's the most important thing. And that's why the main thing is why this is totally different. And yes, the Genius Act and all that. But that clip with Samson Mao is like fiat is, it's a dying game, and the stable coin just props up this same dying game, right? Where he says, pretty much everything's just going to start getting priced in sats in the next 5 to 10 years.
Yeah, that's my point, right?
Eventually,
because those equities will then be priced in sats, right? Because these stablecoin issuers are buying Bitcoin, right, with their reserves. So basically, they're
are they though? I mean, depending on what stablecoin, who's launching the stablecoin, because I think, if I'm not mistaken, from what I read of the act, is that they have to have U.S. Treasuries, correct?
Yeah, that's true.
Yeah, so U.S. Treasuries to back this. Even if you're launching your stablecoin from, let's say, Uganda, right? I'm going to launch my stablecoin from Uganda, but if I want to do that, and I'm a startup, and a builder and a dev in Uganda, well, I've got to have access to treasuries. I've got to have access to T-bills, so I can use that to then back my stablecoin. And it's probably going to have to be backed, like to your point, Nick, also by a basket of other things. Probably some Bitcoin would have to be in there, I would imagine. Maybe
because, they have treasuries, partly, of course, because they have to, otherwise, they get a visit from America. But the other reason is, liquidity, right? And as Bitcoin becomes more and more liquid, it starts competing with treasuries, especially with the BRICS, playing along, right? They don't want American treasuries.
No.
Yeah, and I mean, Saylor's product are already Bitcoin type bonds, right? Let's be very clear. They're kicking out a 10% yield. I think you say it was Stride, or is it Strike?
Strike. It's the STRKE.
Yeah. So Strike's pushing a 10% dividend. This is already like other countries and people are going to start to figure this out too, right? Like, and it's just going to escalate and escalate and escalate. And I think we're like right before all that happens. And it's like we just got churn, right? Churn, because everyone wants to trade instead of everyone just taking a deep breath, being patient for like a month or two and watching it go.
I got one,
but again,
one curveball question, right? Because there's some rumors that the BRICS are going for a gold-backed cryptocurrency, which, since they're all buying gold, it does kind of make sense that they might do something like that. So how would that play into sort of America adopting Bitcoin and they are adopting like a gold-backed cryptocurrency?
So somebody asked me that just recently. It's hilarious. They don't work. Unfortunately, Australia did this in 2019 or 2020 for a couple of years. And they took in some money, but the thing about why it doesn't eventually work is because everything has to be transparent and on the blockchain, and that's nobody wants everyone to know like how much gold everyone has, and it kind of doesn't work. So you can build networks, and this is another reason why if you listen to some of what Samson says about the Aqua wallet, right? Like when you're doing those transactions, they stay very private compared to if you're doing those transactions on any other chain where you can just take that public address, put it into their block explorer, and I know what you got, right? Yeah. Like these are facts, right? And this is why privacy is important. And, Blockstream and Aqua and Jan3 have been working on these products for many, many years. And this is why I think why Litecoin, right, is also important. And, Mimblewimble, the side chain has been sucking up I don't know how many Litecoin over the last like 12 months or so, but it's like, so again, privacy is very important, and that's why, you know, Bitcoin is working on these things, Litecoin is working on these things, and they're both proof of work networks. Proof of work is vital. Everything that I've done with proof of stake, I've had problems with, right? Even as basic as UX and UI, right? It's just, even if it's just annoying.
Yeah, and I think your point with security makes a lot of sense, right? As we move forward, and since we're on an exponential curve, it goes faster and faster. You know, security becomes more and more important. You know, security and decentralization. So, all working proof of work chains with a finite set will do pretty well. Yeah, and I think Russia understands this. I think, you know, I think there's probably a back and forth between Russia and China on that. China wants gold and Russia wants Bitcoin.
It's starting to become like a global thing, right? Like people, like all those countries, all their leaders know that it's important, and the more and more they think about it, they're like, it is. And it's like, now, should we be wasting money on, you know, bombs and guns, and should we be investing it more into Bitcoin? And some would say AI, and I always say less in AI, more into Bitcoin, because it's time and time again, I've, you know, even today, right? I just showed Julius AI. I was like, you missed some, you missed a couple there at the end. Oh, yes, I did. Oops. These AI protocols, even some of the best, like that's one of the best ones out there. MIT data scientists and developers working on stuff. And there was an article that just came out from MIT that said 95% of these AI models do not lead to extra profit. So again, it's not going to take as many jobs as people think. It's going to take a lot of jobs. Yes. Is it going to going to be like a Y2K event? No, I don't think so. Again, they make mistakes. They're very human. I think, yes, coders, yes, you're in trouble. Sorry. Coders are in trouble. Data scientists, even data scientists. That's why I probably will never get a job, even though I love data science, because Julius AI, it's like, I can, boom, you saw what I just did. That was like, just tell it what to do. Boom, it did it. Like, oh, good, thanks. Good job. So they're gone. Obviously, some customer service jobs, it'll get good at that, I think. But overall, it's just another tool. Siri and Amazon, was it Echo and Alexa? They haven't stolen millions of jobs. They actually have led to more jobs in America. Apple is one of the biggest companies in the world, and Amazon literally through AWS and all the products that they move through this country, you know, billions and billions of dollars every other week or so, right? So, you know, Bitcoin is the superior product, though, just because we're creating crypto energy, right? I guess that's the best way to say it. And there's so many applications, from Quantum Expeditions doing methane flare mining to TEPCO in their slow season, when their customers in the fall and the spring, when their customers don't need as much electricity, they're cranking out Bitcoin, right? And like we said, all of these people globally are figuring this out. They're going to mine it. And all the people who are like, oh, I can't, that's too technical for me, I'll just buy the ETF. And all the people in the middle, they're like, I know how to use a smartphone. I'll just buy some Bitcoin. And as we move forward, we just have to see those active wallets go up. It's not a massive number. I had that pulled up somewhere. Let me see if I still have it. And we can wrap it up in like 5 or so. But you can see it's looks like we're heading in this direction, obviously, but it hovers between like 1 million active wallets, and it looks like 700,000. Obviously, this is from 2022. It looks like, but just recently, this line here. Wallet active wallet addresses, yeah, like literally right around 698,000. But this graph also supports my theory that a lot of bot trading going on, right? It's active wallets high, low, high, low, high, low, high, low, right? So they're going from I'm either betting on Bitcoin and winning to going back to stable coins, right? And that's what I see here. That's just a loose interpretation, but I'm pretty sure that's one of the reasons. And the majority of those wallets are obviously gambling with Bitcoin instead of realizing that it's the best savings account ever.
I wouldn't gamble on Bitcoin, man. I don't know who's crazy enough to go out there and gamble on Bitcoin. That's just.
Again, there's so many other things you can gamble on. Like literally, like go to the casino. You got better odds on like a blackjack table. And obviously, the people that are good at this will tell me I'm crazy. And I'm like, nah, you probably do. Again, Bitcoin does its own thing.
To me, I look at it like this: Bitcoin isn't made. And I know I'm going to get a lot of pushback from a lot of folks as soon as I say this. So I'm going to nut up. Bitcoin isn't made for trading. Bitcoin's made for stacking. Okay. Bitcoin's made for saving.
Correct.
If you want to trade and you want to do all that, hey, God bless you. There's a whole casino out there called Binance, and you can go there and then you can spend your casino time and do it that way. That's where you do the trading. And that's why you got meme coins. That's why you've got different projects like that. Bitcoin, not made for trading. And folks who do, I know there's a lot of people who make an income trading Bitcoin on a short time frame. And God bless them. That's a whole different mindset and it's a whole different strategy. But really, it's
one out of like 1,000 though, literally though.
So not financial advice.
And that's what social media will fool you about, right? Making it seem like everybody can make money trading.
I think that
like,
what's even more, you get lulled into this sense because, it's so easy to do on my phone. Oh, look, I can just go like this and do this. And like, I'm a trader now and I'm doing all kinds of trades and margins and I'm getting stopped out with 50x leverage. Yeah. My ass you are. You don't know shit. Shut up. Stay safe, stacks. That's
liquidation.
Exactly.
I got to go take a Bud Light and Xanax, guys. I got to
putting it in your. Yep. No worries. We're going to wrap it up there. But yes, Bitcoin's designed for long-term savings. Protect your paper money from the insanity of the other casino, which is joining forces with our casino to keep their casino afloat. But thank you for joining in. Today's show is the 4-year cycle over? And it kind of does look like it is. All indicators pointed to that way. And thank you to my co-host, Manny Satz, for sitting in today. Thank you to Nick, the producer. Thank you to our sponsors, Quantum Expeditions, Shield Folio, Deorganized Media, and everyone in the Bitcoin Live family. Thank you for doing the show, and thank you for hanging out today if you were watching at home. Peace.